We're live with George Coyle today, and we were just talking off mic a little bit about trading and holding yourself responsible. And I think that's something that's really important as a trader. Something that most people don't do in life is something that's incredibly important as a trader. So, George, what do you think about traders kind of holding themselves responsible? I don't know why I have this strobe light thing going on right now, but it is what it is. So, George, what do you think about self-responsibility as a trader?
I think I'd rather blame somebody else.
Yeah, I would
Just kidding.
too.
Yeah, I think that's to a large degree why the investment management business, the wealth business exists for whatever it's worth. Taking a little bit of a deviant take on it, but I think people like to blame people, and it's interesting because when you Tom Basso is one who talks about personal responsibility. Ed Sekoyta talks about that. A lot of the greatest traders say you have to take responsibility for your outcomes in trading and in life. And even if like external things happen that you can't control, you still have to take responsibility. So I think you see a lot of people that have been successful and that we all might want to kind of emulate, saying, yeah, you got to take personal responsibility for almost everything that happens to you, because if you start to blame other people, I guess you get into that mentality of you can't control your destiny, things of that sort. Now, that said, and I'll repeat what I just said, but it's funny because I was kind of thinking like the buy and hold guys have done an amazing job of telling people like just buy and hold. That's all you have to do, to the point where so many people are doing it. They're like, well, what am I paying you for? And that business is now morphing to, well, we have a financial plan to justify the fees from what I've seen. But I started going through, and I'll write something about this in the near future, all the reasons that people do pay advisors, even though they could really do it themselves. And one of the big ones was they want somebody to blame. They want somebody to call and yell at. If you buy and hold yourself and the stock market gets hammered and you're down 50% and it's just you, who do you yell at? Who do you blame, right? You have to take personal responsibility for what happened. And if you have an outside person, you can be like, this idiot, he screwed me over. And so anyway, yeah, I guess to summarize, I think that the guys that we would all want to achieve similar results to, they say you have to take personal responsibility for the things that happen to you, even if you really can't control them. And then the masses hire other people so that they can yell at them. And maybe that's why like these guys are so successful and the rest aren't, in the same vein in trading, at least.
No, I get that. It's really important to just be able to look into yourself and think like, hey, I'm messing up. I'm the person. I'm the reason that's doing this. Like I think traders, when you first start trading, it's very easy to go, well, I was listening to this analyst over here, and he said that this was a good stock. And I did that at first too. I think the first thing I did was go around and try to find everybody who did this well and was like, oh, well, they know something I don't know. And they're the smartest people in the world. And because these are the smartest people in the room, I then will have to learn from them, and I will watch what they do, and I will do exactly as they do, and I will make money. And that's a fallacy of trading. So you do not make money by following somebody else's trades. You have to have your own conviction. So when you have your own conviction, you put on your trade, you understand where you're getting out before you're getting in. If you're following somebody else, it's the old quote from the Livermore book, which is you're dependent on them for the tip to get in, the tip to get out. But really, it's you can't sit there and really unless you're going to sit right next to that person every single day as a trader. That's the only time you could possibly do that, but it doesn't even make sense. It's even if I even think of my own letter. I put out stuff. I put it out as much as I can. I put it out as timely as I can. But I still try to teach people to trade for themselves, because at the end of the day, it's not something where you might not have the same risk level I do. You might not have the same trend following system as I do. You might be a mean reversion trader. You might be a value trader. You might be a fundamental trader. You could be completely different from me, and that's fine. It's more of you have to figure out what works for you. And once you figure out what works for you, then you have to have your own conviction built into your own trades. And you got to take your own responsibility when you blow up your own trades.
Yeah, I think that's right. You can't really blame somebody else unless you hire somebody else to do it for you. or if you had a split personality. But yeah, I'm a comedian today here. I think you learn a lot. You study what other people do. As you were talking just about different styles, I was thinking, there is no one right way. This kind of gets away from responsibility, but a great thing is the China stimulus, right? And everybody probably saw that David Tepper is out on CNBC saying, like, buy everything in China, everything. And Michael Burry, the Big Short guy, he's long a lot of those stocks as well, JD and Alibaba, whatever. But then yesterday, Kyle Bass was on CNBC, or yesterday, the day before, and he's saying, like, you don't buy communism over time and have success with it. And then Druckenmiller was at a conference, I guess Grant's interest rate conference. Gregory Zuckerman was tweeting it, and he was saying, I can't buy China. So yeah, it's like, here are these people that are market legends and greats. They've had great success, and they have totally different opinions on what you should do with China stimulus and the stocks. And I think Tepper's argument was like, these stocks are, I don't remember the specific metrics, but it was valuation based. And then the macro guys are kind of like, you don't buy communism and win over time. So it's like, who do you listen to? I don't know. It depends on you, right? Like, who's going to be right? I guess it depends on the time frame. But I think it's just an interesting example of that. There is no one right way. And one of the things I think a lot about is, you start out and you read something and it sounds good, then you try it and then it works for you or it doesn't. And then you read something else and maybe the best way is you read a lot, you learn a lot, you try things as you go, then you learn about yourself and you say, like, whoa, hey, Richard Dennis made a ton of money, but like, when I see his monthly returns, he'd be down 30%, 40% intra-month or within a month routinely. And I can't handle that. So then you go back and you revamp it. And at a higher level, I think it's interesting because you've got sort of the buy and hold guys, the Warren Buffetts. And he says, if you went to the grocery store and your groceries were half off, you'd buy them all, right? You'd be so happy because you get to buy your lettuce or whatever for like half price. And he looks at stocks that way. And he has the faith that they're good companies, and he doesn't look at them so much as stocks as like buying companies. And he does the example of farmland and how, nobody's going to give you a price on your acre of land every day, whereas stocks do. So if you think of it like farmland, you'll find value, you'll buy it, you'll hold it. And he gets excited by drawdowns, but a lot of people don't, right? A lot of people see the drawdown and they're like, oh my God, how bad is it going to get? That they start thinking of depression, end of the world. So they say, well, I'm going to go to private equity because in private equity, I don't have the problem of, liquidity and mark to market. And that's why it's a big positive for people. And then some guys say, well, I don't like that because I don't really have total control. So they want to run a business, a single business, but then they've got idiosyncratic risk, right? And then you've got traders who say, well, I just cut my losses because I don't want to sit with them. I don't have the faith, but I can get out. And then I'll ride the ones that do work. And so I think, kind of as I've thought of it, those are sort of the four camps, the main camps, I guess, that you can be in as an investor. And no one of them is right without the benefit of hindsight and defining what right means. But it's like, you have to come to know yourself. And then once you know yourself and what you can handle, you can figure out which strategy is best, how much risk you take within that strategy, and then accept the consequences, which I guess gets back to responsibility. So anyway, that's a little bit of a detour, but it's something I just think a lot about. And I think that the current thing with China is such a good example because it's like, well, wait a minute, like Tepper's awesome and he says to buy it, and Druckenmiller's awesome and he says no. And like, who do I listen to? You kind of got to listen to yourself and define a process, because if you do, to your point, take somebody else's example, the Livermore comment, you got to call them. And I doubt they're going to answer my call. Maybe they'll answer yours and tell you when to get out, but I kind of doubt it, right? So maybe looking at all of that is a good way to sort of come up with it and decide what process is right for you and to follow it. And I think I guess the other thing is you can't really like read or learn your way into knowing how you'll respond to losses and different negative outcomes, of which there's always going to be a negative outcome for every approach for some period of time. So you got to have the faith. Yeah. All right.
Yeah, no, that's a good point. And I just think that generally, like China's a great example. We could talk a little bit about China here because it's something that keeps coming up for me. I'm long China. We've been long it for a while in the long-term portfolio, anyways, and it continues to come up. Oh, why would you be long China? China communism, China this, and it's like I have a signal, and and at the end of the day, like that's kind of how you have to think of yourself as a trader. Like, are you a trader that looks at the fundamentals? If you're looking at the fundamentals, then you go, okay, great. If you're a person who does based on your personality, then you go, okay, my personality is this, therefore I will only trade things I like, which probably will not work very well for you. If you can trade things that you don't like I mean, if you go back through my posts on Substack, you can see that I actually did say I will never buy China. I will not buy China right now. And it was literally at the beginning of this year. So like probably January, I said I would not touch China. I will not, buy China. I wouldn't buy it, at all. It doesn't make any sense. There's a lot of things it's possibly saying to not buy it here. But basically my trend models were all down. I had a very bearish thesis on it fundamentally as well. Then you start to get buy signals and you go, okay, well, I am now buying China. Like you sound crazy to normal people, but as a trader, it's like that's just the name of the game. Like you have to be able to change your mind at any time and move on to what's next. So sorry about my strobe light today, guys. I'll get a new cord soon. I think it's the cord.
Yeah, it's an interesting point. It's kind of fundamentals versus technicals, right? I mean, which is better? I don't know. Same thing. Like depends on the time frame, depends on the person, depends on the bets. But you don't like China conceptually for whatever fundamental reasons, and then your system gives a signal and you buy it. And there's fundamental guys who, people will say, "Oh, Michael Burry's the smartest guy in the world," and I haven't researched his historical 13Fs, but if he bought them in the last 2-3 months, that's awesome. But if not, he's probably still losing money despite this, right? Mm-hmm. But I guess another thing to think about just kind of philosophically is like, what's the hierarchy of priorities in your approach to trading or investing? Do you come up with a fundamental thesis and say, I'm going to stick with this thesis like hell or high water because I believe it's going to manifest over time? Or do you say, hey, I let the price tell me what to do? And I'm more of a price guy because I've just had my clock cleaned many times. I do like fundamentals, but I like to get out of things because it bothers me. I don't see something go down 50% and say, oh yeah, I get like my favorite stock at a discount. It's just not me. Like I don't think like that. And I think the majority of people think kind of how I do, at least the ones that I've met over the years. But that identifying a hierarchy of prioritization in terms of what's more important, in your case, obviously the price action and the signals are going to dictate what you do, even if you think like, boy, I don't want to own communism, I don't want to own China, whatever you want to say, but you'll still take the signals. So clearly, as evidenced by your actions, what's the top priority to you is price your action. Signals and prices. Yeah. And other people say, no, I believe the fundamentals are there and I'll stick with it. Now, I personally think like the systematic approach is cleaner in a way because you know what you're going to do, because there's that you buy into a stock or commodity or whatever, and you hold it and it just keeps going down, down, down. If you're fundamental, that approach often, at least in my experience, doesn't really have a solution for what to do when you're wrong, other than just wait until you're not wrong, right? And some stocks go to zero, some markets go down a lot, so you can wait a very, very long time. Comparatively, the technical approach, usually it's like, well, where do I get out before I get in if I'm wrong? And I've come to really appreciate that. But I guess it also depends on the type of investment. If you buy a property that throws you rent, you're kind of like cash flowing as opposed to betting on price change potentially. So, but yeah, either way, I guess the larger point is just, if you start to dig in on this stuff and learn it, you can figure out which one feels better to you as a person. And then you can say, I like this approach, but I like this, not that, and this risk level. And here are my priorities. And then you can really clarify how to go forward. And that's probably when you should hold yourself responsible. Once you've basically made it to the point where you know what you're doing and why, and then you have to accept the outcomes, good and bad. Maybe that's, I've never heard anybody say it quite like that, but that could be a good explanation as to like okay, once you know what you're doing and what you're trying to capture, and you accept that there's going to be times where it doesn't work, that's when you should really hold yourself responsible, because you can't say, oh, geez, like I have a trend model that's on the stock market that goes up and the stock market's going down and I'm losing money. I mean, that's just the way it's going to happen, right? Like if you're a trend guy and the trend's against you, or there's no trend, you're either not in a position or you're losing money. So you can't shake your fist at this guy. Well, I guess you could, but that would be sort of foolish. So,
yeah, I mean, and I like this comment from Nick, which is, if I have to live in a world of communism, then I'm going to profit from it. And it's funny because it's, and you'll find this funny, George. I don't know if I've ever even told you this story. So years ago, it was 2020, and we ended up getting that signal to get long energy. I think it was in November 2020.
okay.
I had a client who got very upset with me. And basically, I had no idea what was going on. I just get an email, we need to talk now. They get our, I think it was our January statement or something. And he goes, why are we long energy? And I said, well, we're long oil. We're long I think it was the IXE, the energy sector futures, and I think it was gasoline, oil, heating oil, and natural gas. I mean, it was like everything had a signal. And
just to clarify really quickly, I assume you're talking like after the crash. You got in on the other side of.
It's November 2020.
Okay, got it.
Yeah,
because obviously oil prices went negative. Looking at markets, the price charts, I don't think you'd be long in a trend system.
No, we were short. We were short into April 2020. We didn't have a position in oil until I think we got a position in oil probably before that, if I remember right. It got over 30. I think that's when the long signals kicked in. But that was way into the summer of 2020. And then November 2020, it gapped out of a bottom. I think it was a double bottom. It had a huge gap up. We ended up starting to buy around that zone, but we already had, then it was like gasoline had a signal, and heating oil had a signal, and natural gas had a signal. So everything had a signal. It was right after the election. Everything basically went insane after the election. And I had a client hit me up right around that time and go, hey, why are we long all this energy? And I was like, because it's moving up, and he was like, well, I don't really feel okay, investing in these and helping these energy companies. And I was like, well, if we're $1 billion fund, maybe that argument makes sense, but we're really not helping them. We're just trading them. I said, and you're profiting from it. So what's the problem here? And so he kept going back and forth to me. Why don't we invest in solar? I said, well, we did trade some solar, but if solar's now, now it's going the other direction, I'm not going to be in solar anymore. I'm like, it's a trend system. So if I'm running a trend system and looking at the price action, I don't care what exactly is the underlying. And he got so offended by me saying, I don't care what I'm trading as long as we're making money, that he never worked with me again. Huh. he took his money out and he left, which is fine. But also that was a year and a half after that of profiting from those moves. Like that was our best year that next year. And if we weren't long energy, we wouldn't have had a good year. So it's interesting when you think about it that way, is like, you have to be very open to trading things you don't like as a trader. Like, I'm not saying I don't have a problem with energy or whatever, but I'm saying some people do, like I don't like to buy defense stocks, but if it's a great trend and it's moving higher, I might buy defense stocks. It's something that, it bothers me, but it doesn't mean I can't profit from it. And really, like, you have to start to let go of those biases as a trader, because you'll start to do it with everything. You could do that with anything. You could say, I don't like the U.S. economy and what they're doing today in the world, so therefore I'm not going to buy the S&P 500. I mean, it's endless. So you just have to kind of let go of those biases.
Yeah, I mean, I guess that guy's priority, whether he was aware of it or not, in hindsight, was not profit at all costs. He wanted to profit from things that he felt were aligned with making the world a better place. One of my first jobs in the business, I worked for like a multi-billion-dollar stock manager, and I filled out RFPs, requests for proposals. So somebody will come in and say, we're looking for managers, and you fill out these 100-page documents, and it's very, very boring, but you learn a lot. And there was always a category about sin stocks, and would you? This is 20 years ago, but like, would you be willing to take the sin stocks out of your portfolio? So that might be like casinos or tobacco or what have you. And so I don't think it's a new phenomenon where people are concerned with that stuff. But as I'm thinking about that, it's like, and I've said this many times at places, from that study of a century of stocks, and it's like the best one is Altria, the tobacco company. So clearly, if your primary goal is profit, as evidenced by that sample size of one with that stock, but it's like you probably don't want to exclude anything if profit is your primary goal. But maybe you say, hey, where's the line, right? Like Pablo Escobar.
If you're at a point where you have all the money in the world and you're happy, and that's great, and I think there's two different things, and for me, I think there's two different ways to be. And in the markets, I need to be understand that my number one goal is to protect my clients' money. So that doesn't matter what I think. I can't look at it how I think, what I want to be different in the world. I have to protect my clients' money and my money all the same. So that's always number one for me. But if we look at it like in another way, which is like you got the ESG thing going on right now. So every big bank, every fund, they have the ESG thing. And what that means is clean energy, they invest in clean energy and so on. And they have all these ESG funds at the moment. None of them give a shit about helping you make money, or because somebody said that to me the one day. They said, oh, I just invest in these ESG funds and stuff. And I'm like, these people don't care about you. They don't care about the planet, but they know that it will pull on people's heartstrings and they can bring money into their own fund and get a fee on it. I'm like, and that, I'm not hating on it, do whatever you do, but I'm saying that is why they do it. They don't do it because they really care about you. And not to mention, like, look inside those funds, you'll see Exxon Mobil's inside of there, like it's not very different than investing in energy stocks anyway. So it's a really interesting thing to kind of think about as a trader, which is, and then I also think another part of it is take your profits and do good things in the real world. Like, change the things you can change. You can't change. You're not going to take out Exxon Mobil tomorrow by not putting, by buying 5 shares of it or not buying 5 shares of it. You will, however, change maybe your community by doing something. You will, however, change, like I can change the insect population in my backyard, like it's you can do all of these things, but you have to, one, make profits. If you're broke, you can't do any of these things. And so make profits and then take your profits to do good things. That's another way of doing it and looking at it. But once again, not hating on it. If people want to go out there and just primarily invest in things they care about, fantastic, great. Just don't expect it to be something that makes money.
Yeah, I mean, I guess, like, I don't know if you read Going Infinite, which is the Michael Lewis book about FTX and Sam Bankman-Fried, but they call that, what you just described, effective altruism, I believe is the word. So it's like, I can do more good by plundering the financial markets and then donating that money than I can, by myself, sort of digging a trench for water with a shovel in some country without water, right? And I guess there are these like legal and moral lines that you decide what you want to cross and what you don't. I recently rewatched Breaking Bad, and it's a great show, right? It's much better like with the fast forward function, because he does these slow pan in things and you can just and watch like 3 episodes in the time of one. But obviously, like, it's an extreme example based on a fictional story, but it's like he wanted to make money. That was kind of the goal. And he didn't care that people suffered from it. So I guess it goes back to clarifying your goals, designing a process to fit your goals. Where are you?
But there's a huge difference in, like, that's a leap to go to, like, you're selling drugs to buying Exxon Mobil stock. Like that's a leap. That's a bit of a leap.
It is, in a way, and it's an extreme example, but like the shades of gray get very gray, right? Like, so, there are companies that are doing things like, take a tobacco company. I mean, people die from smoking. So if you invest in that company, are you contributing to people's deaths? I mean, I don't want to go into like a morality thing, but I guess they're just very
good. It's a good conversation, because I don't think, one, I've been clean for 15 years, so I was an addict. So thinking back to being an addict, like, there are things that I have, now that you bring that up, I think about, like, I have never bought an alcohol stock. I've never bought one alcohol stock the whole time I've been trading. So
Because
there,
of your addiction,
I
or
don't
just
know. I just never thought about it. It's something I never thought about, I guess.
would you buy like Budweiser if it meant your trend system gave the signal? Or
Yeah, I think I could if that was my job. But in my sectors and models that I trade, like, it's just never come up. But I also think maybe that's also on purpose. Maybe there's something inside of me. So I think everybody has maybe something, like, it's something like, one of the first traders ever talked to me about. He's like, everybody has something. There's one thing you might not cross that road. So I don't doubt that everybody has something like that. Like, maybe, like, if you don't like communism, maybe you're not going to buy China because of communism. Maybe everybody has one thing, but I think the problem is when you get to, like, you start to think of the election and you go, okay, well, I don't like this guy who's going to be the president, therefore the stock market's going to crash. The same thing with, like, I don't like this company, therefore the energy sector is bad. Like, you can't get too deep in the weeds on it, but I don't doubt that now that you say that, I'm like, there's probably something for everybody.
yeah, with that, and I'm always like picking on Stan Druckenmiller. I feel like because he's transparent and says a lot of stuff in public, and I pay attention to a lot of it. But he talked about in 22, I think it was an interview in 23, but he said, he just couldn't buy the US dollar because of what, fiscal policy and government policies were as it related to economic policies, right? And I don't remember specifically what he said, so I'm kind of generalizing. But the point was, he said, I can't buy Joe Biden, I can't buy this, government and their economic policies. And because of that, I miss this gigantic trend in the dollar, one of the biggest trends. And so, yeah, I guess that's all. If you design a system, are you subconscious? It's focused on futures. Are you subconsciously avoiding wanting to buy a beer stock or whatever, or Diageo? I mean, who knows?
Because we
But
have an ETF portfolio, and I'm sure there's, like, a brewery ETF or something that mainly has a lot of brewers in it that I've just never seen, and so I just wonder if it's a subconscious thing, for me. But I'm only thinking about that because you brought the Altria up, and once again, it's like there are some there. I'm not saying there's not bad companies out there. There's plenty of bad companies out there.
no, it's I think that Soros had a great quote. He told Byron Wien, it was in Soros and Soros. Byron Wien was the strategist. I think he passed away recently. He was Blackstone and Morgan Stanley before that. He didn't get started till his 40s either, in a big way. But he said, you'll never be rich because you like to do interesting work. And he's like, what do you mean? And he goes, well, the person who wants to get rich doesn't really care what he does. Like, if he has to set up more shoe shine stands to make money, that's what he does. And so it's an interesting point, I guess, and it gets back to this, what are your priorities? What are your goals? What are you willing to do to get there? And what shade of gray are you willing to do? Will you buy beer stocks or alcohol stocks, having been an addict? Or, like, I don't really like buy and hold investing because I think it's so predicated on the future looking exactly like the past. But if my primary goal was to make money, I think the easiest thing I could do would be just join a bank and just go out and just be like, look at this efficient frontier. It's the most return for the risk.
The efficient market.
You'll be fine. And then, like, if the future doesn't look like the past come people's retirement time, you just say, hey, yeah, sorry, shit happens. Yeah. But like, I don't like that.
My bank, you're like, my bank account. That's the thing about it, which is really interesting about the industry, and that's why I say, like, you have to be willing to buy whatever. But I think there's a difference with willing to buy and trade whatever. Then, like, I'm not holding on to the energy sector in hopes of owning ExxonMobil one day or having a controlling share or helping the company grow. I'm going to sell it at a higher point. That's going to be my main goal. And hopefully not at a lower point, which could also happen. And that's it. It's not something that's going to benefit the company that much. It's not. And that's what I think a lot of traders don't understand, is like the amount of money that you would need to really benefit one of these companies is pretty insane. Like you'd have to be a Buffett or somebody like that coming into them.
Yeah, but I guess there's also like we have to, what's the Carl Fox, Bud Fox's dad from Wall Street? He's like, I don't go to sleep with no whore, and I don't wake up with one. And I probably shouldn't say this, but like, I don't like the cult of Apple, what I'll call the cult of Apple. So, originally Apple came out with the first candy bar phone, and it was great. It was different, but now the technology between Samsung and Apple and other providers is just so similar that it's kind of like, what's the difference? I mean, other than like the basically software interface and getting used to like, okay, I do this as opposed to that because I've had both. They're the same. There's not that much physical functional benefit, but people love Apple. They love them. And what I've found over time is Apple tends to, they use these sort of like what I'll call crummy techniques to keep people locked into their ecosystem. So, oh, the blue messages. Okay, use some other messenger server. No, people love iMessages, right? And then they keep changing the plugins to charge. So every time you have to get some new equipment, you have to get a new cord to charge it. They used to do something where it was like if you had Office documents on sort of on a Mac and you wanted to move them over to anything in the quote unquote PC world, it wouldn't work. You had to get some third-party ripper to open a file that you already had because it was basically encoded to that software package. And so I think they started out with a better technology offering, and over time the competitors have caught up, as happens, but now they keep people locked in. But it's very interesting because most people don't care. They're just like, why would you have a Samsung? What a piece of crap. Apple's the best. And I'm like, have you had both? And usually they haven't. And when I've had them both, I'm like, they're very similar, but Apple keeps you logged in. And then I also, since I'm down this rabbit hole, I'll go a little further, but Steve Jobs, like I've read his biography or parts of it, and he's sort of like a king among kings to people in the capitalism society, but like he invented a phone and other stuff, but it's like, we don't like have posters of Alexander Graham Bell in our house, right? He also soaked his feet in the toilet, and sounds like he was just a super unpleasant guy to be around. So anyway, like I historically have been like, I don't really want to buy Apple because I kind of have a issue with what I just described, but it's like, should I not want to do that? I mean, that stock has gone up like crazy. And ultimately what I decided is if the system or approach that I'm using gives a signal in Apple, I'll buy it because I want to make money more than I'm like annoyed with what I call the cult of Apple. But it's just, I think it's an interesting example of what we're talking about today, where it's like, conceptually, I don't want to do it because of what I just described, but my goal is to make money. And if that's the best stock to be in, then so be it, But they're obviously not killing people. They just, I think they have different means to keep clients. Yeah, people are like, oh, it's too hard to migrate everything over now, so I just stay with it and stuff like that.
So what you described there is actually why I trade ETFs and futures. So I'll give you the backstory. I don't know if I've ever explained this before, but the backstory is in the early 2000s, I was trying to buy individual stocks on names that I researched and thought I understood things about, which is, nowadays I know that's ridiculous, but I'd research, I think I know things about something, I would try to buy it, I would get my ass kicked. I would do this over and over and over again. And then finally, like one day I realized like it was just my biases. So basically I was like looking at these individual names, comparing and being like, oh, Apple, I got an iPhone, I got to buy this company. You got a car, it's a Chevy, you want to buy Chevy stock, something like that. And I continued to do that. And you listen to these guys and you go like, if you listen to like Warren Buffett and he says something like, hey, invest in things and you're like, oh, this guy has made an entire career investing in things he knows. And I don't know. So I'll just find things I know. And Apple stock, one of them. And the next thing, and the next thing, and the next thing. So as we continue to do that, I'm going to go off camera. So at the very least, people don't have to look at the blinking. But if we're looking at that and going, okay, well, Warren Buffett says to invest in things and then you try to do it, like maybe that makes sense if you're holding things for 50 years. Maybe if I had bought Apple and, Chevy and I held it for 50 years, maybe I'd be okay. But if really I'm a trader, I have to look at that in a different way. and I have to go, okay, well, I'm going to buy this thing. I might sell this thing. So for me, I moved to futures and ETFs because there's no individual names that I can get attached to. I can't look at any of the names and say, hey, this would be a good idea for me to buy this thing over here because of this thing that I like, or it's a good idea to buy this car company because I own this car and I like this car. Like I own a Toyota now. I'd be like, oh, I should buy Toyota stock. That sounds ridiculous. So I think it's a really interesting conversation to have, though, because I think all of us have some sort of bias, and maybe it helped to build us to the trader we are today, or maybe it's something we're still struggling with.
I think bias is everywhere. I mean, like the Druckenmiller thing I said about the dollar and my thing with Apple. But in theory, systems don't have bias. But it's like, well, what metrics do people use to qualify a backtest to become the system that they want to run? And I've known a lot of system traders. I've talked to a lot of them. And it's not like everybody says, geez, I want Sharpe ratio. Some guys are win to loss ratio. Some guys are total profit. Some guys are MAR ratio. I tend to be MAR ratio focused because I think drawdowns are what make people give up. If they lose too much money, they panic and they throw in the towel. But there's no one right answer. And so within that, you're bringing your bias as to what you think is the most important metric to qualify a system to do the system that you run. So even though the system you may run is mechanical, if you don't change it, you still have bias in the construction in terms of what you thought was an important qualifier of the system. And I've yet to meet anyone who actually runs a system based on a back test that lost money. Although some people have said, well, what if we did that? We took what was the biggest loser and then we traded that, although I don't think anyone's ever done it. As you were saying that, and I was thinking about that, one thing that came to mind is this idea, and I think Tom Basso did a study on it, and what's the Winton guy's name? David Harding, right? Both of them, Basso's talked about this before, and Harding posted something recently on, maybe it was Covell posted his comment, but the point was, they did random entries and cut losses and found the system to be profitable. And then if it was like random entries and you didn't cut losses, it wasn't profitable. So if bias is everywhere, maybe the key is to just try to eliminate as much as possible subject to your goals, and then just stay consistent in your process and cut your losses. Because in theory, if you do anything better than random, you're going to wind up with, even if you did random, you're going to wind up with profitable results. But if you do better than random in terms of your entry mechanism, you should do better than random entries over time, as long as you're cutting losses in both cases. So that's obviously very philosophical, but yeah, those are just the thoughts kind of going through my head as we were talking about that stuff. So
no, I like it. And I love these conversations because I think, one, these conversations are questions on traders' minds. Like, yeah, I'm sorry, and I do post clickbait. Don't get me wrong. I mean, the top of it says market hitting all-time highs. I know how to try to bring people in, and I know that at the same time we're not having those types of conversations about how crazy the market is today and fear mongering and whatnot. But I know these conversations are questions on traders' minds because they were questions on my mind, and they were questions, and they were very important in learning how to trade well. Like if you have biases and you continue to kind of blame other people for your mistakes, and then you're going, well, this person said to do this and I did that. Like I said earlier, when I first started trading, I thought Warren Buffett was a great person to learn from because obviously he made a lot of money and he said to invest in things that so I tried to invest in things that I knew. It's not Warren Buffett's fault. He has a completely different methodology than I do. Because if you're trying to buy and sell things within a few weeks, of course, it's going to work different. So, but leaving your biases at the door and then coming in and buying, whatever you need to make money to profit from the markets, because markets are already tough enough already. And if you have a system and you start to exclude things because you don't like certain things, you're only going to lose money doing that.
I know you got to go in a minute here, so here's an idea for an experiment we could do, but it would take more of your time and my time. But we do 3 shows. Each one's a half an hour. One is trading philosophy and principles, this show, right? Mm-hmm. And this is what's led to the better results in my personal trading after a lot of years of doing it. Because if you have the theory and the philosophy right, what comes after, I don't think matters quite as much. Yes. We could do that. Then we could do one on objective fundamentals where we talk about what's happening and why is this market doing this and whatever. And then we could do a third that's just total bear porn, just like anything that we can grab and be like, the world is going to end. And then just run them for a quarter and see which one gets the most, attention.
You already know the answer to that.
Yeah, but it'd be fun to do in like a real time sort of experiment. But right, the bear porn is going to get.
Maybe next week we just get perma bear week. We just we've just find a bunch of bearish charts. I'll post them and draw lines of them going to zero or something.
Yeah, right. Just draw. The Martin Zweig quote. You can always find some bullish or bearish evidence to support your philosophy, which I've found to be true. But yeah, for whatever it's worth, I mean, I know people don't love this philosophical stuff, and people always tell me, "Oh, you're way too big on theory." But the truth is, ever since I've gotten way into the theory, like my results, subject to my goals, have gotten a lot better. And I think it's just so important to have that bedrock foundation. It's like, should I buy this here or sell that there? I mean, that's obviously important. That's how you make money. But the theory and the philosophy are what lead to better process, which over time leads to good results. So there's the pitch for like focusing on this stuff as opposed to bear porn.
No, and I like it. So let's end it there. I'll get a new cord this week. I don't know what the hell happened to my cord today, but all right, guys. Thanks for joining us, and we'll see you guys soon.
See you next week.
With the bear porn.